Financial services is a big capital game and it needs trust and credibility. The ability to pay and intent to pay, like that, those are the two pivotal things of any good lending decision.
Hi, I'm Yamini Bhat. Welcome to the FinAI podcast. FinAI is our brand new podcast series that explores the intersection of Gen AI and financial services. In this series, you'll meet a set of guests who are CXOs of market leading financial institutions around the world. They'll be talking about their experiments with AI and what's worked and what's not worked. In addition to that, here is the fun part. They will be sharing with you AI wishlist tools that they're willing to put their money behind. Hi everyone, welcome to this new episode of FinAI podcast. We have with us Vipul Agarwal, President at Piramal Capital. Hi Vipul.
Hey, hi Amini, how are you doing?
Very well, thank you so much for joining us today. So Vipul, you spent a decade in consulting and then more than a decade now in financial services, right? Walk us through what were the highlights and what did it take to really transition from consulting to corporate?
It's a great question. One of the things I loved about consulting joining in was the rapid exposure it gave you to very different C-suite problems that most CEOs, boards, etc. faced. So it was probably the fastest apprenticeship that you could get into any area. But the biggest part of what I really enjoyed at McKinsey was building businesses, and I realized that hey, while we do have impact, you don't stay back to see some of the daily grinds and problems that some of the executives might face as they're actually in the trenches building things out, and you from the outside as a consultant. And so, really, the itch for me was only when I would move on. One of my mentors back in McKinsey told me, "You have everyone in McKinsey decides, how much time you want to give to the firm, and it is of your choice when you want to then move on because you have a different calling." So, my calling was really I wanted to build businesses, and therefore move to what people would say as the darker side. But for me, it was the most exciting part, and I wouldn't probably have it any other way.
Wonderful. And how have you chose financial services as the space to build your career in, right? Like what has the learning been and how has this space evolved for you over the last decade plus?
Fascinating. Again, I came in with a little bit of background. Pre-MBA was a little bit into financial services and so on, and corporate finance was an area of deep interest. Just academically, I was very, very excited about that, and so my very first project in consulting was actually nothing to do with financial services. That's just the way the firm works. And while I had a great time, I realized that I really wanted to have a better time, and so went back to financial services and did a very wide spectrum of things there. Industry was still evolving. We were at very early stages. This was way back in 2005. We were still looking back early stages of the development of the financial services industry, life insurance, general insurance, asset management, lending in general with banks and BFSIs. Like everything was going through was looking up, and so it was an area I really wanted to spend time in. What was exciting for me was that the world was changing very rapidly through this time. And I just had this feeling that, hey, the way things work today is probably not the way we will see in a few years hence. And that sort of space to live in is generally very exciting for me. And that therefore was also, for me, the calling within financial services. There, I would say, I was looking for something where there was deep ambition. There wasn't a lot of legacy to work with, and therefore build something that is a bit more different, relevant to the future. And that's where some of my career choices have played out for me.
And what was it about Piramal Group that attracted you most?
Oh, those, so one of the early realizations for me was that, hey, financial services is a big capital game and it needs trust and credibility. And as a professional, you wanted to be in a place where you're really looking ahead and you're not looking back. So the bar on ethics is very, very high. And for me, Therefore, I went through this sort of structured thought process of saying, hey, which institutions would you hang your hat off? Would it be players in the region, Singapore or something else, or London, or you'd say, hey, where's really the growth happening? It was India, and then you'd say, hey, who within India is well positioned to sort of capture some of that? And then through that process and a process of conversations, very friendly conversations, realize that, hey, this is a fabulous place because there's a lot of capital post the Abbott transaction. There was deep hunger and ambition, and just the human capital quotient here of having seen professionals come through and make a difference, a positive difference. There was a track record, and so that enabled for me to take the leap and have what a lot of people would say, hey, you really need to have a good landing into the corporate space.
Yeah.
And I would say I'm blessed in that sense. I had a great landing here.
And the decision has aged well, right? Like 12 years and counting.
Well, yeah, yes, actually, and thanks to some really good advice early on, one of the roles I stepped into when I joined Piramal was involved for me to work, of course, very closely with the founders, the promoters of the group, but also the board. Right, at one point, just as a little anecdote, more than half of our board had Padma Shri Award winners, India's highest civilian award, right? And so that was the caliber. And one of those had really good advice for me, which is make yourself redundant for what you're doing and get to the next big thing. And so no 2 years for me have been the same as the previous two. And that in a way has been sort of reflective of what the group is about, which is having entrepreneurship and giving space and taking bets and therefore allowing for people to have an exciting career. Yeah, so 12 years and counting, and it's been amazing. Have played multiple different kinds of roles through this phase, and being a little bit of a learning junkie and looking about sort of what's happening around the corner. That has fed a little bit into that desire of mine.
So while it's under a corporate umbrella, this was pretty much like a startup from around the time that you joined.
Very much. Yeah, absolutely. So the 0 to 1 and 1 to 100 in many different ways, has been one sort of cornerstone of my career here at Piramal. And so that has been like the one thing that's been very exciting for me here. So yeah, absolutely.
So
Startup-ish.
Vipul, can you share a little bit more about that? Like, what were the biggest bets that worked out or say did not work out? Because that's the way of entrepreneurship, right? And what are the biggest shifts in financial services that happened in the ecosystem
Right.
that
Right.
probably needed to be adapted to?
Yeah. A great question and a very wide question. So some of the big bets, firstly, post the Abbott transaction, there was a large pool of capital and you could deploy it in various ways, right? As a capital allocator, the promoters are really astute at this. So one of the big calls taken, and this was before I joined in, was to, hey, double down on financial services and financial services in India, because if India grows at X, generally 2 to 2.5x growth, nominal growth is what you expect. Exactly, and that's a great tailwind to have over a long period of time. Of course, it's cyclical and so on. So that bet itself, in the very first place, it requires great capital. There's a lot of businesses that are great from a growth standpoint, but if they don't need that much capital, the multiplication that you can have on that is only limited to that extent, right? And so that itself was a fabulous call. Alongside that, there were a bunch of other non-financial services calls that the group had taken to be in the information management space. We had a company that we owned in the US called Decision Resources Group. Again, a fabulous investment because it gave us a complete ringside view in the US and Europe about what was happening at the intersection of data, analytics, and business. And to bring that thought process into what we were building out back then in financial services was again fascinating. 2013 was when I joined the firm, and that was a time of great dislocation in financial services because banks were bleeding and hurting on the back of a lot of infrastructure lending that they had done. And so we made a ton of money on the back of construction finance, structured lending, etc. Of course, we grew a little bit faster than we should have, but nonetheless, in those years, like we grew really well and made a lot of profits and so on. I think that call also played out overall reasonably well. But then the big one was, I would say, getting into retail, because any story in India which has so many consumers and so many small businesses would be incomplete if we didn't have our toehold in that part of the serving that part of the franchise, right? And so today, what we are is more than 90% retail. We have a 65,000 crore overall AUM, retail lending AUM, and that serves the deepest parts of Bharat, both consumer as well as the merchant. A big moment there under the new CEO Jairam then was, of course, the DHFL acquisition. It was the first such acquisition out of the NCLT process. Again, a really fabulous acquisition because at one stroke it gave us deep collections capabilities across the deepest parts of the country, but also it allowed us the distribution capability to go deep and accelerate our growth plans. Because organically building up something takes its own time, but to have at one shot a remarkable acquisition of that kind gave us a real jump start. So I think a lot of good calls, at the senior most levels that allowed for the group and the company to shape the way it is, the way we see it today.
Vipul, share a little more about this. What is the ideal customer uh, for the group, right? And how does that influence your entire go-to-market and
Yeah,
product strategy?
yeah. I think great question again. See, for where we are in the, let's say, from a rating standpoint, being clear about who your customer is amongst the most pivotal decisions a company can take. Again, very broad and generic. But for us, what that meant was we were very clear very early on that our customer is actually the Bharat customer. So he's not the really very high blue chip salaried customer. There's only finite number of those people in the country, still remains to be so. But it's really the Indian who lives in the small villages, let's say tier 3, tier 4, tier 5 type markets, the peri-urban areas of the big cities where so much of the development is happening. India is a country of self-employed and people who work with the self-employed, and they tend to be have shades of being formal to informal and lots of things in between. And so we that's who really our customer is. That is not to say that, hey, these are subprime. I think somehow there is this notion that, hey, this means that this customer is quote unquote bad, is quote unquote subprime. That's not true. These customers have their ways and needs of what they want from a lending institution. So let me just turn to the second part. Having made this choice about who this customer is, we said, hey, what are the needs of this customer? What do they want? They are typically wanting to buy a house. India, if you travel in the trains, etc., you will see lots of land and an independent house. And it's interesting, as you go deep, you see that, hey, it's just a ground structure, on an empty plot of land. And then there's a little extension that happens typically when the son is coming of marriageable age, if there is a son or whatever. And then as that family is expanding, there is a G+1 structure that comes up. So plot plus construction in the home lending side is a very big segment for us, right? They will have a household income as compared to in the urban areas an individual income, right? Our income would be underwritten, our repaying capability would be underwritten on the back of salaried slips, income tax returns, and so on and so forth. Our customer typically is underwritten on household income, right? Our branding is that of Niyat, which is to say, hey, your documents may not completely support everything, but can we gauge that you have the right intent? Because ability to pay and intent to pay, like those are the two pivotal things of any good lending decision, right? And so what we are today as a product company is serving home loan against property, used car. Typically this customer, the first asset, movable asset that this customer buys is typically a used car. And over the years, we have seen how the used car volumes have crisscrossed the new car volumes. We thought about, hey, the way the used car journey works is not the way it'll work in the future. And so we've done a few innovative things there to be in the transaction flow and therefore serve that customer at the point where the customer has that need. We have unsecured businesses, both personal loans, we have business loans, we have very small MFI business. So pretty wide spectrum, and we are sort of trying to cater to that customer more and more for the needs through their life cycle.
Got it. And you also talked about, so this, I mean, being able to service a customer who's otherwise perceived as subprime, rightly or
Yeah,
wrongly, right?
yeah,
And then being able to figure out the go-to-market mechanisms on distribution as well as collection,
yeah, yeah.
right? I'm sure it involved a huge amount of a data analytics play. And you also talked about the group's investment in that space, right? So can you share some examples on,
Indeed, I think fabulous question, fabulous question. So very early on, just as we made a choice about who's our customer, we also made two very specific choices, which is data and technology at the core. Because the realization was that in the day and age that we are building, if we were building a business that looked the same as what it was 20 years ago, then what have we
was
really
the
done
edge?
to
Yeah.
advantage? Exactly. What's the edge? How have we made this business future proof? And so today we have physical journeys, we have completely digital journeys, which are always on, and we have digital journeys. And through all of this permeates a very deep understanding of the data, both about the customer, about the channels that they come through, about their needs. So we are in general a very data hungry company, and we tend to use both structured and unstructured data for decisioning. Just to give you a few examples, and this is just not about, hey, uh, can we use better data for decisioning somewhere in the back end, but it's also reflecting in the ways we work in the company. So today, in real time, every piece of data that I need for monitoring growth, risk, profitability is real time on my mobile phone with, of course, the right security standards, etc., built in. And it's available to the count of one. So even the person on the ground has access to real time data. We've now moved one step further. So having got the tech stack internally built, we own the code, every piece of code, the engineering stack is completely grounds up built. We've gamified this, right? So what does a salesperson want? A salesperson wants to know, hey, am I one threshold away from hitting the next lap? How much have I earned really? How could I just do something better? And similarly for the underwriter has a lot of things going on in their life. How can we use some LLMs to simplify what otherwise might be a few hours of job to read something that has some nuggets of information that the person really wants to glean out and then make a choice? So one of the mental models we've used is, hey, how can the combination of data and technology come together to make life simple for the customer and for every piece of our ecosystem internally that serves that customer? It touches both at the point of acquisition, at the point of underwriting, at the point of portfolio management from a customer service standpoint. So we've just thought about all of this in a very holistic manner, and just having both the chops on the data science as well as the technology side allows us speed to think of the use cases and then implement those use cases out.
Yeah, this must have set you up really well for the whole Gen AI explosion, right?
Oh, yeah, it was phenomenal, right? And it was, maybe I'll just dial back. This was 22, late 22, actually. We were seeing the power of what was happening. ChatGPT, OpenAI had made, public its first set of things there. And we said, hey, we are totally removed from what's really happening here. So a leadership group of 5-7 people, and credit to Jairam for sort of thinking this through. We made a 10-day trek to Redmond and Seattle, and our purpose was just to understand at what was happening there. And we were not bothered about use cases for us. We were just bothered about how this world is changing and how that Turing test has just been surpassed by a bunch of models. And in a few months' time, we had the next generation of models and so on. And we were just so excited. And we said, hey, this is that moment we have to embrace. And while we had AI and we used a bunch of AI, we said, hey, we now need to embrace this next step and think about use cases as can bridge the gap from the math to the money, is how Jairam puts it, right? It's very interesting because it was very easy to create vanity use cases
Yeah, just to stay
and
busy. Yeah.
show, and just show to the world or something, something. But we said, hey, let's really touch the core and see how this makes a difference. And it has to, at some point, not at the get go, but at some point, make sense, either from a risk management perspective or from a growth perspective or from a customer experience perspective. So yes, I think the short answer is adopting the generative AI use cases means you have to have the ability to deploy these and for the workforces or your customers to use those meaningfully. If those run as islands, then you need a lot of patchwork. So today, at any point in time, even when we are having this conversation, there's deployments that are happening all the time. And those can be model deployments, those could be tech fixes, or those could be just enhancements and so on. So the speed at which you need to operate to embrace some of these use cases, in one part, the strength of that comes from owning that piece of code. So absolutely right. It just totally put us well there. And I would say we've made some good starts, but there's a lot more to be done from where we are today.
So, whether in the post Gen AI world or even before that, Vipul, what are the use cases which you believe gave you a very distinctive edge over either competition or just in terms of being able to service the customer better?
Yeah, so you know, at a very conceptual level, the ability to rapidly deploy changes. So today, if we see something on risk, and we say, if I want to make this change, either a tweak in the model or my policy, and then deploy that, because these are always on journeys, right? There are journeys that run 24/7. There are acquisitions that happen in the branches through the day. The typical time and motion associated with some of these is long dev cycles and long deployment cycles. And the ability to just rapidly put some of these out there because you observe something and you say, hey, this splits risk and now I want to put this out there in my code, is the speed that comes through from just firstly just owning the data and the tech stack. But specifically on AI, one of the amongst the there are lots of use cases that we touched upon, and the way we tend to think about it is the triad between growth, risk, profitability, and underneath that, customer experience, compliance, and so on, right? And so, if there is a powerful use case, we democratized all of this, and if there was a powerful use case that touched any of these, it was all up for, and we hung this off our big corporate objectives. What's the corporate objectives? Initially, it was, hey, can we grow, and can we grow really well, and can we step up the productivity of our sales teams? The next step was, hey, can we really underwrite well and shave off risk, especially at a time, nature of risk that was there in the last year and a half, 2 years, right? And could we do so in a very, very profitable manner? So we massively deployed AI across all of these things. Again, a couple of insights that we had, we could have rushed head on to replace traditional models with AI. And we said, hey, let's really think hard about where does AI make a difference? And so we realized that, hey, the traditional data science techniques that helped us build the models still split out risk massively. But where we used AI a lot more is in unstructured data. And then use the combination of the two to equip either our business rule engines, our underwriters, or whatever else to make better decisions. So we didn't make the mistake of saying, hey, here's Mr. LLM, a bunch of data. Now just give me the best model. That just doesn't work. So powerful use cases, making the underwriter more productive. What generally tends to happen is a civil report tends to have reams and reams of trade lines, open, close, and all of that. But what it's looking for is a bunch of specific flags. And if you know those, you can easily feed those into an algorithm and pop those out into a few small, simple words. Let me take a different example, sentiment analysis in our call center, right? A very simple thing like, hey, the regulator has been talking about this. Has there been a beyond the red line, a very rough conversation between a collection agent and the customer who's in delinquency? And that's a red line you don't want to cross. And the traditional way to solve that is to have sampling techniques on this. But a bunch of code can do this all the time and much better at a fraction of the cost to flag. It also serves as a deterrent because anyone who knows that, hey, this thing is running and it's going to flag in real time will obviously think
Be more
very hard
compliant, yeah.
about exactly and be a lot more compliant, right? In the same manner, we've used a lot of gamification at the count of one to inch up what is generally a behavior amongst sales teams, right? That the sales queue tends to happen towards the end of the month. Customer need doesn't come with a end of the month timestamp, right? It's just a creation of how the lending industry works. And so, can you use AI to sort of have a conversation? We created something called Aria where a person could just call in or chat and have a free flowing natural language conversation. Could be English, Hindi, Marathi, whatever, right? And so that's that these use cases are so many that it's difficult to point to one or two. But the because in one part our vision was data and tech at the core, and we were constantly seized of changes that were happening. We said we have to embrace these. And for the most meaningful parts of what drives growth, risk, profitability, customer experience.
All right. Vipul, this is fantastic. The way you speak about it, it feels like embracing tech is part of the culture,
Yeah.
right? So that translates now into how do you hire, and are there core principles in how you hire and promote talent and manage talent that has helped the organization, stay consistently technology first?
Yeah, again, that's a whole chapter. I can have so many of my colleagues speak about that because they really went deep on this one. But I'll give you small stray examples of this to just give you a sense of how we think about it, right? There was a time just around the second wave and post, like when attrition was just you were just filling the bucket and it was just like flowing through, and it was in the tech talent, it was data science talent, it was in the sales teams, like touch whatever part, and it was just like you were just filling up the bucket, and you were like, this can't be the way it runs because it just breaks the back of any company you want to build through the cycle, right? And so we said, hey, can we bring the horsepower of data science into people? So today, our models define quarterly variable incentive pay, and autonomously they push out, using the agentic framework. We are working on that to take the next set of actions. The recruitment, which was a very idiosyncratic and completely erratic process because it was human judgment, my judgment from yours, so on and so forth, has been agentified. We're working on recruitment agents and so on. Retaining talent, great talent, is all about recognition in one part, and then giving them bigger challenges. And so one of the mental models at the senior leadership team, and then we're trying to permeate that out, is to say, hey, like be benevolent in recognition. And I'll touch a little bit thread on that one. And then give them great tasks. And I'll touch upon a little bit a few things of what we've done on that part as well. So on recognition, we actually very early on embraced agile because we said, hey, to move through linear cycles of decision making is just yesteryear. And so we said, hey, the senior guys are not going to be the bottlenecks, and we're going to actually break down silos and create squads. And so squads had, quarterly mandate, they had sprint cycles, they had retros, and they were, cross-functional to a point that even our compliance teams, our legal teams, etc., were all on Jira. They would align, they would raise a Jira, and they would have their own work blocks, and they would work through on that one. And when you work through, and if for the many who've gone through business school, I think this is just like your study group in a business school, right? All the free riders get visible, all of them have equal opportunity, the introverts, the extroverts, and so on, right? So that's a little recipe we've really preserved. We've thought really hard about, hey, we did this early, but how, when we are today 500 plus branches, 15,000 people, how we still retain this fabric is something that we give it enough thought to. We have very structured programs for accelerating people on their growth curves, and hiring from within is again a very strong muscle, to a point that, hey, we've talked about, here's an opening, here's a person within the firm who's interested in applying for that, goes through a process without his or her manager knowing it, and therefore feeling the safety of really caring about his or her career. And at the right juncture, the wires are stitched up, and the growth is enabled for that. For important new business builds, there was a stage when we were really building up new businesses. We used to pool in people like this, and we used to say, hey, this is a fast track. Very often in organizations, people would think about, hey, this is special project. What does this really mean? What's the future of that? Let me talk to 10 people, this, that, and the other. And, there'll be a lot of pontification around this. And we said we visibly would sponsor out things that were important. We'd run through a process of screening so that hypos would come through, and, they'd have the right landing pads beyond the projects to be able to make a strong career. So some of these things, similarly on the tech side, our engineering talent, our product managers, they want to build, right? And to build means you need to envision ambitious things. And so that in one part has been, contrasting, would you love to change the color of the button and be that for the 6 month journey, or paste these two words here or two words there. Of course, I'm not demeaning that, that's important. But, there's a life beyond that. And so that value proposition, in a way, really attracts that. Similarly for our data science guys, right? I mean, just think about the journey that they have taken over just 3 years, right? From building standard logistic regression models, and XGBoost models, to then having AI, to then having LLMs, and now to think about agentic. Like, that's a PhD,
Yeah.
in 3 years'
The
time.
pace of
So
learning is
that's
super
one of
high.
the value proposition. It's brought down our attrition massively, for those that find this invigorating.
Nice. Phenomenal. So, Vipul, how does all of this add up to the company's performance metrics? Are there metrics that, you are clearly consistently outperforming everyone on, and therefore all of this stitches together in terms of a huge competitive advantage in the market?
Yeah, and I think great question. And I'll answer this less as how an analyst would look at, through the prism of a peer benchmarking. There's enough and more of that, so, and easily available. You can, in fact, ask this question to ChatGPT, and it'll give you a pop answer very quickly. But in the way we've seen this, growth has been uh, stronger because we've been acquiring market share in every product market segment that we are present in. Uh, Again, in a lending business, that's very easy. You just have to give money. And so that's where the second dimension comes, which is risk. And we measure that. We don't kid ourselves about what's our job. Our job is as risk managers. And if our risk appetite is to get wrong only 3 or 4 times out of 100, I need to be right 96 to 97 times, right? And so we measure this very, very anally, externally, internally, and so on and so forth. And so through the cycle, risk performance on any cohort, like we measure risk horizontally, not make the mistake of measuring risk vertically. So, when you measure risk vertically, the denominator, which is the disbursement, somehow creates this myth that, hey, I'm really doing so well. While horizontally, when you are adjusted for vintage and all that, is when it really shows up. And when we do any sorts of benchmarking, in fact, that's a piece of data we have real time live in our dashboards. we're doing a fairly solid job. Our narrative out there, and we speak quite openly about this. We were very early on talking about, hey, over leverage in the system is going up. It's become too easy for anyone to start an unsecured lending business. It's too easy for anyone to get an unsecured loan. When the barriers are so low, generally something is changing in the ecosystem. It coincided with the fact that, hey, RBIs are talking about slowing down unsecured loan growth. And so we were sort of always looking around the corner and well prepared to some of these things. And so hopefully, our story is strong. More of the ecosystem sees that we're on the path to profitability because we have been in the investments phase, for our branches and so on. But given the penchant that we have for data and, some of the tech investments, think about this, like a lot of platforms will charge you per person per month in dollar terms. Each of those are multiplicative and have a natural inflation built into them, and we don't have that problem. So we have so hopefully a very strong story. If we look at the happiness quotient, if that's sort of a lead indicator to things, be it employees, be it customers, NPS, etc. Those are all sort of trending really well. So hopefully the story is strong.
Awesome, Vipul. Now, if you had to do a bit of crystal gazing, look into the next 5 years, what are the problems you think are yet unsolved? Whether these are organizational or technology or just regulatory or customer, right? That could be huge opportunities to solve for.
Yeah. Yeah, I think the rate of change is such that adapting to that, depending on what your starting position is non-trivial. You could be an incumbent, you could be an attacker. You're an attacker today, but you could be the incumbent of tomorrow, right? And so, how do you really frame strategy in that context and adapt to what's happening? Regulation, we are in a regulated industry, and regulation allows for innovation, but it often also comes with some lag effect to give proper structured growth for the industry. Adapting to those changes rather than always thinking, hey, this is a yoke, oh, the regulator's not, innovation friendly, etc. I do think that, regulation comes, like there's innovation, there's regulation that comes with a lag effect. And the winners generally are those that adapt to it very quickly because the rule book has been laid down. And if you operate at the margin, there's always something that you will be caught off guard with. So that, yeah, and it'll catch up, right? Think about AI and agentification. I want to talk about both of those, right? AI does pose a problem because as much as the opportunity it has, does it create systematic bias, right? Is something that we should just be very conscious about, right? Agentification, like it puts into question pretty much everything because autonomous algorithms with reasoning and the license to act will put into question, is already putting into question traditional org structures, right? If I can write up, hey, Mr. Agent, you are was X, this is your role, this is your KPI, you have this team. I've already mimicked in the agentified world what exists in the real world, right? And so therefore it calls into question, hey, how far and hard would you push that? What does this really mean for the future of jobs? Is something that I'm really enamored and fascinated by at this point in time. We have agentification as a big rock for this year, and we're sort of figuring it out what this really means. So there's a lot of big things happening. I also tend to have a little bit of this thing that, hey, there are certain journeys where the customer wants engagement, but how can that engagement happen meaningfully with a human, but enabled a lot more with data and tech? Is again a very interesting thing that I think people who crack that, a lot of the times we tend to think, hey, can a few click journey be everything in the life of a customer? But sometimes that's not what the customer needs. And so being mindful of that is again very interesting. It's a very difficult problem to embrace because you can make something completely physical, you can make something completely digital, but the combination of this is not an easy one to crack open. So these are big things, and I would also say, like, there is a lot happening at the confluence of data and technology, and a lot of large platforms are realizing the value benefits to accrue to them from having a toehold into financial services. And that remains an area to be seen as to how that will evolve. And will they operate within the regulated space? Would some of them become an NBFC or bank? Looks less likely. But in some shape and form, they are going to be there. And so, what does that mean for the industry structure? Can the leaderboard in a few years' time look different? In the same way as, does the S&P, could anyone have seen like 1970s, 1990s, 2000 and what it is today? Like, could the same happen here in the financial services industry? So these are big questions, some with an immediacy of timestamp, some with a real crystal ball gaze, and I wish I had some of those insights too. But that's something like just being the learning junkie that I uh, I think a little bit about.
There is a lot of upside, right, in the segment that you are targeting. This is reasonably new to financial inclusion also. And you're surrounding them on the lending area, but very quickly they can move from just a lending consumer to a more, to an investing consumer or a risk managing consumer, etc. And I think that is where probably, it's not just a agentic relationship, but being able to have that kind of an engagement. I think there is a journey to be covered. And my
Yeah,
belief in all of this is, while certain simpler things, which were always a pain to do anyway,
yeah,
administrative and a pain to do, become agentific, they support the org users also. And the same user now will be able to, I mean, your employees also have to grow. The consumer
yeah,
also needs to be, can be surrounded
yeah,
with more of an
yeah,
offering,
yeah,
and with richer conversation. So I think all of us have space to evolve.
yeah,
And maybe it's not the today's jobs of these orgs that are at risk, but
yeah.
actually upside of for these individuals on
Absolutely.
how much more they would be able to do individually.
Absolutely,
Right. So
absolutely.
yeah.
And on that note, like, one of the things so that people start embracing this is we've said, hey, start letting all of these tools come into your life.
Yes. Yeah.
Because as a user,
Accept.
you
Yeah.
start accessing them, you start using them, we will start to then conjure up
Yeah.
what the future might look like for
Yeah.
us, right? And how do we
Yeah.
adapt this, adopt this, and so on,
And
rather
that's
than
where it
feel,
comes full circle, right? You started by saying that one of the board members, probably a Padma Shri Award winner, told you that, what you're doing today, just make yourself redundant for that, right? And I believe the tools will exactly do that for each of us, right? What we are
yeah,
doing today, we don't have to do or spend that kind of time anymore, which completely opens us up to doing things that can take the organization to the next levels. Yeah.
indeed, indeed, indeed. No, it's a fascinating thought.
Awesome. Thank you so much, Vipul, for your time. This was a very interesting and enriching conversation for us, and wish you the very best with what future unfolds. Thank you.
Thank you so much. Thanks, Yamini. Love your questions. Take care. See you. Bye.
Bye.